Hey everyone, I'm Steve Lachance with Maine Real Estate Today, and on today's episode, we're going to be talking about all the different programs that are available for you. You're going to be surprised at how many products out there that exist that you may not have heard of from your loan officer. I'm here today with Billy Kimball from Integrity Mortgage as well. Billy, welcome.
How's it going?
Good.
Good to see you this week.
Thank you. You too. And, the last few shows we've done, we've talked about investment properties. We've talked about, is it the right time to buy?
Yep.
But now we want to talk about showing buyers that there are a whole lot of other options out there.
Oh my God. There's thousands of different products. We'll talk about the basic ones that, most people that I still talk to think, they still have to come with 20% down. The old days, it's the 80s. Yeah. There's so many different products out there right now, and it really fits different borrowers. Like we were talking about before, when clients come to me and they always come in, they're like, oh, I want to do an FHA loan or I want to do a conventional loan. I say, just hold up, let's do an application, and then let's see what best fits your needs.
Yeah, getting to know somebody's situation so you can talk about what their wants and needs are, how much cash they have to work with, because that's going to be a big driver of what program you can do by how much cash you have to work with.
What are they going to do in the future? Everybody's got different plans. So looking at different programs, it's very key to see what they're going to be doing in 5 years, 10 years.
Right. Okay. So we start out with the basics. A lot of people know about FHA, Federal Housing Administration. That product we like it because it's a low down payment, a lot more flexibility on debt to income and housing ratios. And we'll have other courses that we can talk about of what ratios we're talking about. What does that even mean? But they are more flexible. So we do like that. It's kind of a go-to program, would you say?
Absolutely. Yeah. They're more forgiving on, bad things on your credit report, collections, kind of stuff, that kind of stuff. Lower down payment options. A lot of people still think it's a first-time home buyers program, but it's really for everybody. It's for anybody that wants to use it as a primary residence.
There's no location limit. There's no income caps. There is loan amount limits per county, so that will restrict a buyer. So that way it keeps it fair. A millionaire could use the program, or a first-time home buyer could use the program. They'll just limit in just how much you can borrow, so it's not
exactly.
You don't have wealthy that eating up all the funds.
That, and one of the things that I get a lot is it's only for single-family houses, but it's not. You can buy up to a 4-unit.
No, and we talked about in the previous show is that you can use up to 75% of the rental income to qualify.
Yeah, it's huge.
That's a big difference. Yeah. First-time home buyer. That's one of our favorite go-to programs, but most people are familiar with that. And as you know as well as I do, it's hard to negotiate, though, in a contract. Yes. Not that we do it, but the realtors are trying to negotiate this.
Yep. But it is coming back. The last couple of years have been very, very tough on buyers because it's been a complete seller's market.
Right.
So they've been taking, cash offers first, large down payment options for them, and FHA has kind of been like that last thing on the radar.
Yeah. So if you're just watching this for the first time and you haven't actually been out there making an offer on a property, what's been happening in the last few years is buyers are making an offer and they're getting beat out by conventional offers. People throwing 20% down, and we're seeing that fade a little bit, although it's location.
Absolutely.
It's going to depend on where you're buying. Some areas there's still a serious inventory problem.
Yeah.
So
and the sellers are looking at it like this. They're having 30, 40, 50 offers sometimes.
Right.
So they're going to take the best offer. And if they have a cash offer and close in 10 days, they're going to take that over the guy that's FHA and has to close in 45 days.
Right. Well, okay. So this leads us to where I'm going with this is our next products that we could talk about are conventional options. Instead of 3.5% down for FHA, we can do conventional 3% down programs.
Exactly. When we say conventional, a lot of people are still thinking that 20% down mark.
Right.
But we have the low down payment options that are conventional loans. You just have mortgage insurance, which is still a lot less.
It's actually lower than FHA in most cases.
Exactly.
Yep.
So it's still, if you're looking at, putting somebody in a loan, and they can both go FHA or conventional.
Yep.
Conventional is always the way to go.
Right.
One, you're going to get the winning on the offer itself, and two, the mortgage insurance is so much less. With conventional, your payment's going to be a lot less.
Right. And going conventional might make you look a little bit more attractive when you're putting in an offer on something.
Yep.
The cons to that, there is an income limit.
Yep.
Typically, most lenders are using 80% of the median income in that location. So it's literally a lookup tool for that.
Correct.
These programs are called Home Possible and Home Ready.
Yes.
And I always mess up which one's Fannie, which one's Freddie. It almost doesn't matter. They're very, very similar. They're both for first-time home buyers. You can use one of them. I think it's Freddie. We'll do some research on this, but I think it's Freddie that allows you to use rental income from a multi-unit as well.
Yep, absolutely.
Used to be you could even use border income. So if you have a roommate that's been living with you for a few years and they've been paying half the rent with you, you can bring them on board and actually use border income. So one of those products actually allow that too.
Yeah. And this is another reason why we run everything through underwriting. You know, we talked about this in a show before. It's like there's so many guidelines and they're always changing and different programs are coming up. It's like you just can't keep up with it all. No. So, you know, having an underwriter sign off on everything like we do at our company, it's the way to go for everything.
And correct me if I'm wrong, there's outside of those programs, Fannie Mae has a straight 3% conventional product as well.
Yes.
Yeah, I think only one borrower on that transaction has to be a first-time home buyer to use it.
Correct.
Yeah.
Correct.
So another great option. The mortgage insurance is not quite as good as those other two, I believe, but they're, again, all options that you want to explore.
Yeah.
And where we're kind of going with this theme today is knowing that there's more than one option is good, but they don't realize how great it is as a backup.
Yeah, for sure.
Every deal I do, I don't care if they're a slam
Especially
dunk.
Conventional to FHA. I mean,
Big time.
Just the debt to income changes. I mean, you know, conventional, they really want to see 45 and below.
Yep.
Whereas FHA, you know, your back ratio can be 57.
Right.
When I say back ratio for everybody, that's your total ratio of all your debt.
Right. So take your gross income and your mortgage payment, including all your monthly expenses, shouldn't exceed that 56 to 57. I think it's been about the maximum. Technically,
really depends on like credit scores too. So if you have a high credit score, you can kind of tend to go a little bit higher, and you know, the lower your credit scores go. Yeah.
So let's clarify that for anybody who's kind of new at. You hear these ratios that we're talking about here. The guidelines are still the same as far as, you know, and the laws of where we can be on a maximum debt to income ratio. But anyone who's working with lenders on the secondary market, investors like Chase, Wells Fargo, Bank of America, I mean, you name them, they're looking for us to run Fannie Mae or Freddie Mac's automated underwriting engines.
Yep.
When we run that engine, that's where we find on an FHA, for example, you can get something up to a 56, 57% debt to income ratio.
Yep.
Now, we're not going to do that blindly. We're going to look at the big picture. If we're tapping somebody out, there's nothing. I mean, they're going to be eating mac and cheese or ramen noodles for the rest of their lives. That's not a good plan either.
I have never recommended a 57% debt to income loan. It's just, it's not realistic. You know, unless you have like, all right, I've got a borrower that we know is getting a pay raise 2 months after we close, and it's pretty significant. All right, then we can kind of max it out.
Yeah, I have one right now where the spouse is not being included on the loan. So we're at a 56 ratio, but the spouse's income is not being considered.
And those happen all the time because that's why we take applications. We'll look at all the different possibilities. So like, you know, if you have two borrowers, but one borrower has a lower credit score, well, let's take that borrower off if you still qualify to get you a better interest rate.
That's right. That's right. And spinning from this, we also have, well, let me actually slow down a minute. Is there or is there not any such thing as a first-time home buyer program?
No.
There is not.
Unless you're going for different grants, because the state of Maine has some things that they can do. But it's usually like do a course and do that kind of stuff.
Well, even in those cases, this blows a lot of people's minds is what is a first-time home buyer? Well, someone who's not owned real estate in the last 3 years. That's the definition of being a first-time home buyer.
Yeah.
So let's get this straight. So I can own 50 homes in my lifetime, and I can go with I'm a first-time home buyer. How is that a first-time home buyer?
But the thing is, the actual programs, whether you're doing an FHA loan or you're doing a conventional loan, there's no first-time home buyer loans.
There really isn't. No, even the ones that you go to the website, first thing you see is first-time home buyer program.
Maybe if you go to a local bank and they've got some kind of portfolio product just specific for you know, first-time home buyers in that area.
First time in 36 months. That's really what it comes down to. But if you haven't owned any real estate in the last 36 months, you can get into some of these add-ons, which are, for example, Maine State Housing. Yep. Maine State Housing is a terrific program. The disadvantage I had to really address in this market is ratios. Yep. It's not that flexible. There is a little bit of flexibility, but not much.
Well, that's the thing is like they have their overlays, and when I say overlays, it's rules on top of the rules.
Right.
So you know where FHA might have the ability to go up to say 57% debt to income, Maine State Housing isn't necessarily going to allow you.
Not going to allow it.
They're going to have their own overlays, and that's why it doesn't work with everybody.
Yeah, and the confusion comes into play where we're doing maybe an FHA loan and then adding Maine State Housing as the overlay to that program. They find the right house. Well, wait a minute, you said FHA allows us to go to 56. Yes, except when we add Maine State Housing, you're going to get grant money. You might even get a little bit lower interest rate, but you're going to be capped at that lower ratios.
Because they're just more conservative.
It's
they're
an
giving
overlay.
that money out. They want to make sure that you're not going to default on your mortgage.
And that number difference lately has been significant.
Yeah.
That's where I'm running into that problem is that most of my clients, hate to say this, we're not looking to get people into debt here, but to really be competitive out there, you really need to know your maximum numbers.
100%.
So these programs, they're being tested to the max.
Yeah.
And that one in particular is restrictive. Same thing with rural development. I'm not picking on a particular program here. Awesome program too.
Debt to income limits are very strict.
It's strict. There's not a lot of flexibility. But they're pretty reasonable guideline-wise. So if you're a first-time home buyer, your advantage is the mortgage insurance. They don't call it that on that kind of loan, but there's an insurance that's lower than most programs.
And personally, I think first-time home buyers, unless it's a situation where the spouse isn't on that mortgage, or like the stuff we talked about before, I really think you shouldn't be maxing out at 57 anyways. So the more conservative routes are actually probably better for a first-time home buyer.
Yep.
It just makes more sense.
It is. Again, the part I've been struggling with for the last 3 years is buyers have not been able to be either competitive, or they have not been able to really achieve that purchase. I mean, let's face it, purchase prices are up. Interest rates are up. Yeah. So when you combine that with some of these programs that are even more restrictive, the vast majority of them don't. That doesn't mean you shouldn't try. So we still explore that. The point of this today on this episode is to talk about different programs, all your options that are out there. And these are some more creative ones. Yep. And here's another thing that I see out there. A lot of times you'll say, well, I don't have to do the main state housing. This other lender has this first-time home buyer program. I don't have to have any money down. It's the same program.
It's RD.
It's rural development.
It's a way to market.
They just find a better, more creative way to market that product. Yep. So I've seen a lot of that. What else we've got? We've covered FHA. We've covered 3 different types of conventional programs that are out there. We've talked about the fact that there's main state housing with some grant money. Yep. And we have partners we work with for these type of loans too. So if it's something that Integrity Mortgage in particular doesn't have the product, we've partnered with local banks that will do these things. Yep. We've also talked about the rural development product, and that program, to clarify, there are 2 versions of it. There's RD Guarantee, which is what we do. Yep. RD Guarantee is there's no catch. There's no recapture tax, prepay penalties, anything like that. Yep. Whereas there's also RD Direct. And I think the way I describe it is you go directly to RD for that. Yeah, yep. And they will subsidize your loan. So if you have low income and you're struggling out there, they may be able to subsidize that interest rate for your single mom or a single dad that's trying to just get by. There may still be a way to get a home ownership that way too. You just reach out to rural development directly. They'll have you take a class and you go from there.
And that's, you look at RD, and that's, to clarify too, that's 100% financing. You can really structure the deals. I've structured some deals in the past where they actually got money back at the closing because the seller paid some closing costs, and we refunded them their appraisal and all that stuff. Yeah. But you really can structure it in a way where you don't need a ton of money. You might have to pay a few closing costs here and there, but it's you're capped at an income. There's county limits for income. And every county's different, so you really need to work with somebody that knows what they're talking about.
Yeah, and these are really just teasers today. We're not really even going into anywhere near the depth to understand each program, which one. Yep. So that's where the big thing is. Talk to us, talk to your loan officer about exploring all your options. Yep. I guarantee you there's almost always a second option for you.
Excuse me. And that, in this market, you have to have those options because one, no one's really taking RD loans right now. Unless you're out in the middle of nowhere and they're not getting a lot of hits on a listing, somebody might take an RD loan. Yep. But, in Portland, you can't use them anyways. But any place near Portland, no one's going to take an RD loan right now.
I hate saying that. It's so true. And that leads me to the VA program too, which is an amazing program. It's almost disgusting when an offer is a VA and they get rejected. Oh, it's VA. The appraisal is going to be tough. It's going to take forever to do, or whatever your reasons are. If that's the answer and that's what you've been seeing, you've been working with the wrong lender. Yeah, that's what it comes down to, because the appraisal doesn't have to take so long. I'll tell you why they do in most places. A lot of lenders are outsourcing to VA for their VA underwriting, and they don't order appraisal or title. Yep. Sometimes they'll order title, but they don't order appraisal up front. Yep. They wait until they have VA approve that loan, or their outsource approve that loan. Yep. We don't do that. We go right in immediately and put it in the VA portal, which can save at least 2 weeks up front.
Yeah, I haven't had any issues closing VA loans on time in the past whatsoever. It's really just getting the listings to take that VA. Yeah. You know what I mean? And honestly, in my opinion, I think VA loans should come first on the list. You know?
I agree.
They've done a service for our country, and I think it's a huge, it's just a huge slap in the face when they go to either take a cash offer or a conventional loan in front of them.
Right,
Especially when it's the same offer.
Well, I get it, but here we have talked about this on other shows. It's fitting the square peg into the round hole because all right,
Yep.
I had an agent come to me once and say, all right, they're not going to get approved VA. I've already tried. We've made offers on 6 different houses. They've said no to every single one of them. What are we going to do? Can you get them approved for conventional? Yeah, but man, they're going to be tapped out, flat broke if I go that route.
Yep.
Their ratios, if the wind blows in the wrong direction, underwriting is not going to like it. They're going to give me a hard time with it. But yeah, I suppose we're okay to start out, and then lo and behold, one $10 item shows up on the credit that wasn't there before, and the deal doesn't work again.
I think in these situations, with us, we've been in the business for a long time. So I always call the listing agents.
Thank you.
When I can actually sit down and explain the product, explain what we've been doing, explain that we've done all this stuff ahead of time and gotten them approved, they tend to look at the offer a lot more seriously.
Yeah. So last summer I had one. It was in Westbrook. Same thing you're talking about. The buyer agent and the buyer was a relative of his. I think a cousin. Doesn't really matter. But he was going VA and he said the same thing. It's Westbrook. So can you get him approved for another program? No one's going to take VA in Westbrook. And I said, why not?
I think I remember this loan actually.
Yeah. So I said, do you mind if I call the listing agent? And he's like, go, whatever. And I called the listing agent and said, listen, I have a buyer here that can go conventional. He could go with FHA or he could go with VA. And any one of these programs work, but the highest and best and strongest point is going to be VA for him.
All day long.
No money. He's not going to have to ask for you to negotiate repairs.
Interest rate's the best. There's no mortgage. It's just the best loan out there.
It really is. It really is. And he's a veteran. We should be, we should be taking care of him. At the same time, I get it. It's business. If your seller's disappointed, he said, listen, Steve, my biggest problem, appraisal is going to take 6 weeks to 8 weeks. I said, well, why? No, it doesn't need to take that amount of time. We'll put it in the VA portal the moment it's ordered, and I will show you who's underwriting, where we are step by step. And we got that a deal under contract in Westbrook. It was a pretty big purchase price, and it worked out great. In fact, the appraisal came in early, I'm happy to say. The appraisal actually came in higher, which I'm also happy to say, which is actually rare in this market.
For sure.
So the appraisal came in solid. We don't always see that, though. We don't always see that. We do see some appraisals come in short, but
again, this is why it's good to have the backup plans.
Exactly. Yeah, and that was the thing. With this particular buyer, could we have switched it to FHA or conventional? Yes. So they were comfortable knowing that this buyer had options.
Well, that's what I'm saying. Half of it is just having a conversation with the listing agent.
And the coolest part about it, turns out the seller of this one was a veteran.
Oh, even better.
So he was like, yes, let's do that. So not even presenting the offer because they're just, nope, it's not going to close on time, or you pick your poison.
That's what I say. It comes down to experience, If somebody had been in the business for 2 years, they wouldn't be comfortable calling the listing agents. And they wouldn't even have the knowledge to talk about it. You know what I mean? You've been in the business, 20 years for me and 26, 27 for you. We're comfortable talking to listing agents, you know what I mean?
So before we end today's show, I wanted to talk more about some outside sources of programs that we have, because this is one of the unique reasons.
I was going to say, we're unique. The company that we work for is very unique in Maine as far as allowing us to do portfolio loans.
Yeah, we have partnered with other banks in the area that allow us to piggyback off their products, which is so cool. Because there are, outside of this, some creative things out there, and buyers will not be told those things, because you've heard me say this before. If you go to a Chevy car dealership and ask them what the best car in the world is, I'm pretty sure the salesman's going to tell you Chevy.
Well, this is the reason you go to a broker like us, because we have access to all the different programs and all the different banks. I think if we didn't have those relationships, we would really be hindered as a company. I don't even know how. Honestly, I don't even know how most mortgage companies are doing business right now if they don't have outside relationships.
I know some of them have some unique twists to the programs or some flexibility in the guidelines that they've done, but it's not the same.
Not even
so
close.
Let's talk about some of the teasers here for other things we can do. Help me with this list.
Yeah, land loans.
Land loans. Not many mortgage companies that you talk to, mortgage lenders will say, yeah, we do land loans. The banks will.
Yep.
So can we.
And usually it's, hey, I'm a mortgage broker. I can't do the land loan. Let me give you a number to a guy that I know at a bank. Instead of, hey, we can do it all.
Yeah.
So much easier. You go to one person, one shop, and then it's done.
Yeah.
No matter what you're buying. You start with us in your first house. 20 years later, you've bought 6 different properties, some land, and we handle it all.
Well, here's another cool one. Property that's off grid.
Yeah,
That's becoming
huge.
more and more
Especially
common
in
right
Maine.
now.
You get a lot of people moving from out of state, and they don't want to go live in the city.
Sure.
They're from New York. They want to go live in the middle of nowhere.
Right.
And sometimes that gets tricky with financing.
That's right. And some of these banks that we work with have licenses outside of the state of Maine too, so it gives us the ability to work in those because they're technically going to be the lender at that point.
Yep,
and
100%.
we're orchestrating the transaction for it
Yep.
for the client. And these things don't cost the customer more money. That's what's the misconception is, oh, you're going to broker it, so I'm going to pay you a broker fee for. It's all built into the pricing, and I can tell you, some of the pricing's better.
This is the money that we get it directly from the bank as far as getting paid.
Yep.
They're basically paying us a fee to go find them customers.
Exactly. That's the best analogy. And that fee is typically better than if you just walked into the bank right off the street.
Oh yeah, because we get the wholesale pricing.
Correct.
You get everybody that walks in off the street is going to get retail pricing. We get basically bulk rates.
That's right. We're sending more volume than the average person walking in. But within those bank relationships, what else do we do? Mobile homes.
Yep.
And we can do those on the secondary market too, but I've not met
Some
many.
of them get tricky though, and we actually have one that you don't even need to own the land.
No, you can do them in a park.
Yeah.
You do it in a park.
I
It's
guarantee
pricey.
there's nobody on the secondary market.
Nobody.
That is doing that.
Nobody. It's very, very limited, even in the local area.
Well, you're basically buying a car or a truck. You know what I mean? In that sense, like you can drive it off. You don't own the land. You know, you're buying almost a vehicle at that point.
It's like
so the
financing an
interest
RV, although that can be
Yes.
insulting to some folks, but it's similar concepts.
Yep.
There's an original UCC filing for that property, and they used to call them a chattel loan. It's an old-fashioned term for it.
Yeah. So the interest rate's going to be higher, but it gets the job done.
Right. That's exactly it. So single wides, double wide mobile homes, that's not off the table for us. We can do them in a park.
Yep.
What else do we have?
Non-warrantable condos.
Non-warrantable
Those are tricky.
condos.
Yep.
So explain to customers what a non-warrantable means.
So there's all kinds of different things. If you buy in a building and there's too many people that rent out that unit,
Okay.
or not that specific unit, but
In the
there's
association?
investors, there's
Yeah.
investors in the association, and they rent out the property that they own. If we get too many of those, say there's some, on the first level, there's some store frontage or something like that. We sometimes have tricky
Commercial influence, yeah.
There's all kinds of stuff that can make
So
it
basically a
non-warrantable.
condo that doesn't meet the secondary
Yes,
market.
exactly.
So if there's literally something that's not going to meet Fannie Mae and Freddie Mac requirements, they call it a non-warrantable. Sounds scary. It just means that it might still be in control by the developer.
Yep.
The developer,
That's a big one. So we developers do phases with condos. So
Right.
whether it's usually different buildings. So they'll build the first building, sell it all out, and that's just so they're not over leveraged with money that they're borrowing.
Right.
So they'll sell all the units, use some of that money to keep building, and then they'll just keep building through the phases.
Exactly.
And a lot of lenders, that are selling on the secondary market, they want to see every phase done, or
Right.
at least most of them done.
Right.
Whereas, we can go to some of our local lenders that literally know the builder. They know who's doing the financing on all of it, so they feel secure that the whole project's going to get done. Because the worst thing is if we sold a condo and did financing on it, and then the construction stops.
Right.
Because then where do you go?
Right. Yeah, my biggest problem I've had with condos is really the developer still being in control, and what does a bank care? What do you think? What does it care? If you had a well-qualified buyer, I've had this posed to me before, I'm very well qualified, I'm putting 30% down. What is the issue here? It has nothing to do with the buyer. They're more concerned is the association established.
Exactly.
Because if that goes defunct, that's where we saw back in the late 80s or early 90s where a lot of these associations defaulted.
Yeah. And if they default, there's literally no way to keep the upkeep of the building.
Roofs aren't getting repaired.
The finish. If they're not finished, the phases, those aren't ever going to get finished.
Yeah, and the developer could just go out of business.
Yeah.
Contractor's just gone, and he owns half of those units. That whole association is going to crash and burn.
Yeah, it's not going to be good.
It's scrutinized, and there's still some restrictions on that as well. What else do we do through some of these outsources? There's so many different variations of these things. So we talked
really
about
is.
The off-grid properties, but that can spin to just true seasonal homes.
Yep, seasonal is a huge thing in Maine. Because what do they want to see? If we do it on secondary market, they want to see all the water heat, all that kind of stuff. Whereas in Maine, we get a lot of properties that don't have a heat source, or they don't have a water source. They use the lake when it's not frozen. Different things like
and there's
that.
some tricky ways. We've seen it ourselves and some of the other lenders out there that'll say, well, there's a way through Freddie Mac if it's common to the area and we have at least one comp, and you run into this huge risk where the appraiser doesn't give us the information we need and you can't do it.
Yep.
And you don't want to find that 3 weeks into it.
Well, sometimes too is when you get into a real seasonal home and and the pricing sometimes gets ridiculous on the
does.
rate. You know, when you're doing a secondary market, they price it out almost to a point where they don't want the loan.
Right.
You know what I mean? Because they know it's going to be riskier.
Yeah.
They know it's out in the middle of the woods and could burn down, and no one's going to know for like months.
There's no house.
A bear could attack it. You know,
Right.
just all kinds of stuff. So it's definitely a riskier loan, but you know, when you can do it through some local banks and they know the area, they know what's going on, they know that, you know, it might have, you know, frozen water during the winter, but it's perfectly well during the summer, you know, all that stuff. It's just more well known by a local bank.
Yeah, and I can tell you one of the other biggest things, and we'll make this our final thoughts. Think about if you're getting into a jumbo loan. If you're going to have that loan, it's in the high category where it's over 726,200. I think right now is the maximum conforming loan limit. If your loan's going to be above that, we can do them on the secondary market, but you find that the underwriting is ridiculous.
Yeah.
There's so many, they condition it to death.
Yep.
We work with some cool banks locally that they don't do that.
Well, they actually almost they make them
amazing.
easier sometimes.
They make them easier. So our investments, our second homes are, you know, we have all of that access to everything on the secondary market.
Yep.
We've been using a lot of the local relationships because their pricing has been so much better.
Yeah. Yep.
No points a lot of times on these tougher deals.
And that's why I say I don't know how the other mortgage companies are competing right now. I mean, some of the local lenders have pricing that's not even remotely close to secondary market right now.
Agreed. That's why one of the main reasons why I came here, because when I first started coming to this company, very quickly I realized I didn't have to be priced out of the investment property market. I was actually still going to be okay. There's lenders out there doing it locally, and we can't say rates here in this format, but we have lenders locally that are doing ridiculously lower rates compared to everybody else.
Yeah.
Yeah.
It's huge.
So if you guys want to know more about products and you want to get more details, reach out to Billy and myself. We're happy to go through your personal scenario and understand your situation a little bit better so that we can get you pre-approved for some of these programs and find you a backup offer too.
Absolutely.
If you guys want to hear more, like and subscribe. Please say hello in the comment section, and thanks again for watching.
Have a great week, guys.